Hey everyone, it's Julie here with TipRanks. Today we are taking a look at two Unanimous strong buy finance stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks in the finance sector that have all buy ratings from Wall Street analysts, plus price targets that would imply upside potential of more than 20%. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. I found these stocks using TipRanks Stock Screener. Found underneath the screener menu, I put in a few different factors, including a strong buy consensus from analysts and our AI analyst, financial sector here, and upside over 20% to get a list of companies down below. Check out the stock screener for yourself on the TipRanks website or right on the TipRanks mobile app. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these two Unanimous strong buy finance stocks. First on the list today, we're looking at affiliated managers. They trade under the ticker AMG, currently priced at $280 per share. They've seen a steady climb this past year, gaining 48%, and in the last 3 months are up over 18%. Affiliated Managers Group, also known as AMG, is a global asset management powerhouse, founded back in 1993 and headquartered in Florida. They partner with independent, high-performing investment firms called affiliates by taking equity stakes while letting their management teams retain significant ownership and full autonomy. These affiliates span traditional managers, hedge funds, and private equity specialists, delivering diverse strategies to institutional and high net worth clients worldwide, overseeing over $800 billion of assets. They shared their Q3 earnings report near the start of November, where they saw an earnings beat but a miss on revenue. The company did outline that they're anticipating a significant increase in their 2026 earnings. Earnings per share of $6.10 beat expectations by 21 cents per share, while revenue came in at $516 million, which did fall $28 million short of expectations. The company did see a significant increase in EBITDA and achieved $9 billion in firm-wide net inflows. They also added approximately $76 billion in alternative assets under management, representing a nearly 30% increase. Following that quarterly report, we did see a handful of Wall Street analysts increase their price targets, including a 5-star analyst from Barrington. He said that the company's strategic focus on alternative strategies and private markets fundraising has contributed to its impressive asset growth. Despite a strong year-to-date share price increase, the stock still trades at a discount compared to peers, offering an attractive investment opportunity. And with 5 current analyst ratings, the AMG stock does come in as a unanimous strong buy. The average price target is $340, implying an upside potential of 21% from current prices. Looking down below, we have all 5-star analysts weighing in on the AMG stock. Price targets range from a slight downside of 2% from a rating back in October to a more recent high-end price target of $433 for an upside of 54%. And for our second strong buy finance stock today, we're looking at Marex Group. They trade under the ticker MRX, currently priced at $39 per share. Their stock has gained 26% over this past year, and in the last 3 months is up nearly 17%. Marex is a global commodities broker and financial services firm headquartered in London. They provide liquidity, market access, and infrastructure across energy, metals, agriculture, and financial markets. They serve commodity producers, banks, hedge funds, and asset managers through their 4 core businesses: clearing, agency and execution, market making, and tailored hedging and investment solutions. They have over 2,400 employees across 40 offices, generating $2.36 billion in revenue last year by helping clients trade, hedge, and manage risk in volatile markets. They also shared their Q3 earnings report near the start of November, where we saw both an earnings and revenue beat, plus robust future guidance. Earnings per share came in at 96 cents, which was 2 cents ahead of expectations, while third quarter revenue grew 24% to $485 million, also ahead of estimates. They saw their first 9 months of the year increase 23% to $1.45 billion, and their prime services generated $171 million in the first 9 months. And once again, we had quite a few analysts increasing their price targets following that earnings report, many of them 5-star rated. With 6 current analyst ratings, the Marex stock comes in as a unanimous strong buy. The average price target of $51 implies an upside potential of 30%. Looking at those price targets down below, they range from an upside of nearly 10% to a high-end upside of 48%. So that is a look at 2 stocks in the finance world, both rated a unanimous strong buy. Let me know your thoughts on these companies in the comments down below, and if either one of them catches your eye, I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a fantastic day. I'll see you back here next time.